Federico, what's your take on this?
Without presuming that I can think like Warren Buffett, I have read.
Channel your inner Warren Buffett. Come on.
Yes. So I have read about Warren Buffett, and I have read the things he says. And I think the first thing he sees is a very, very strong competitive position, what he calls the moat around the castle. That's number one. And I think the second thing he always focuses on is the management team, the quality of the management team who will allow or will enable the perpetuation of the competitive position over time. So if you take those two things together and what you were saying about the slide of the shares, he probably sees what he likes to see, which is a margin of safety. He is paying today below what he thinks the fair market value of the stock should be.
Although, you know, to John's point earlier, does this mean that he's going into tech? Is there an opportunity in tech? Do you see one?
Well, again, I think Warren Buffett is known not to particularly love tech, and I think what he sees in Apple is less of a tech company at this point. I mean, it obviously has a tech component, but it also has what a mature tech company has, which is a stream of very recurring revenues. I mean, you can know where Apple's revenues are going to come over the next 5 to 10 years, or on the iPhone or the App Store, et cetera. And I think that is what probably makes it very attractive to him. He is not taking a huge tech risk to me at this point. It's more about, you know, the cash flows that this company can already generate given its level of maturity.
Julie, you got some of the numbers?
Yeah, I just want to look at the revenue growth for Apple, right? Because we've obviously seen a big slowdown. This is the quarter-over-quarter revenue growth. Obviously, it was a huge grower going back to 2011, 2012. Then it has slowed considerably and, of course, had that drop in revenue last quarter. And when I think about other Berkshire Hathaway holdings, right? Coca-Cola, Kraft Heinz, within technology, IBM, they're not the sexiest companies, right? And so sort of if you think about one of these things is not like the others and you're looking at an Apple, I wonder what it also says about Apple as not being the exciting company that it once was.
Really, you're saying that you don't think Apple's sexy?
Well, do I not think, or maybe Warren Buffett doesn't? I don't know.
But in addition to what Federico said, and I do have a little bit of experience with Warren because I was at Cap Cities when he was a big shareholder there. He also likes a really strong balance sheet, which Apple certainly has. He loves a cash business. There's not a lot of CapEx required here.
No.
So, I mean, this is a
cash.
business, and it's a consumer-facing business, and he does understand consumer-facing businesses. Whether it's Coca-Cola, it was Gillette, it was Cap Cities, you know, he knows consumer-facing businesses. So it's not as unusual, perhaps, as we're making it out to be.
I agree with you. By the way, Cap Cities is his management team, right? He always talks about the management team with a very high standard. But yes, I agree. I think what does it have in the balance sheet these days? 100 billion or so. So there is also the ability to continue to make transformative acquisitions if there are of size. But I also think at this point, many businesses within Apple are cash generating, significant cash generation, which is what Buffett usually likes.